As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a very special returning guest tonight. Bill Murphy, founder and host of LeMetropoleCafe.com, is with us. He's a well-renowned guru on gold and silver markets. He's been tracking, as a member of the GATA, Gold Antitrust Action Committee, been tracking illegal suppression of gold and silver prices for many years. He's been back with us here on Reluctant Preppers to give us a clue of what's going on in the gold market today. Bill, thank you for joining us here on Reluctant Preppers.
Well, thanks for having me. I appreciate it. I don't know how much a guru I am, but I give it our best shot here.
Now, I met you in person at the first Liberty Mastermind Symposium in Dallas, Texas. And at that time, we were just about 2 years into this 4-year-long slide in gold prices. And I remember you asking David Morgan, also a renowned expert in the silver markets, how did we get it so wrong? And I interpreted that as meaning that you and David and a lot of other experts had thought that the breakout to new all-time highs that was happening in 2011 and going into somewhat into 2012 was signaling a complete launching point for a great bull market in gold and in precious metals. But what we've seen instead is a downward trending trading channel for the last 4 years. And just in this last month or so, we seem to have seen gold potentially breaking out of that, well, certainly breaking out of that channel. And we wonder if you can give us some insight into what's actually going on with the price action, but also what are some of the driving factors that you think are behind this. You've visited us many times in the past and talked about suppressive intervention that's been going on, and wonder if you can give us some insight into how, in light of that, we are seeing this apparent breakout of that falling trading channel in gold.
Well, we had this big move. Silver stopped earlier, but gold till after a London conference in August of 2011 through September, the price went up to 1900. And the gold cartels, we call it, which is the bullion banks and central banks and the Bank for International Settlement, the United States government, decided to go from a managed retreat, and they were starting to lose control of the market at 1900, to go into an absolute all-out attack. And to do that, they had to garner up enough physical gold and physical silver to get the job done. And we didn't realize the extent to which they were willing to go to take the market down. Now, if you go back, we had nothing but reasons for it to go up: quantitative easing, all kinds of different events that should have at least kept the price the same, not to cause the gold to collapse $875 and silver go from 50 back down to 13 and change. So in our opinion, these prices are artificially low, that they've been created by this gold cartel. And we felt, based on the intensity of the daily activity last October, every day, we never saw anything like it in all the years of this suppression, that something was different. And then during that time, silver went down 15 days in a row. It was like silver had a magnet, it's been kept under control at 14. And then, as you mentioned, all of a sudden, after the beginning of the year, things began to change. And you've had this, sharp move in gold, not so much in silver just till the other day, but, silver just took off and then got up to 1262. And, now they're attacking again. And I don't want to be too long-winded here, but I think things have changed, because what I've been talking about in my commentary, that they had an end game in mind. And there's two specific examples of this end game. When the HUI made its bottom, right at 100, we said that when after stops, there was a day when the HUI went down something like 7 points. There was nothing else going on. It was just the HUI and the gold silver shares. Boom! And the HUI had formed this massive bottom there, and we thought they were going after stops so they could cover and get out of this thing. And sure enough, the HUI went from 100 to 160, a little above that. And then a week later, you had this thing that you know about in the silver fix, where the price was about 1420, 1410 or whatever. The silver fix went to 1358, went right back above 1400. Another fluke. It said this is a second sign of desperation of these people. And then silver took off close to 16. So again, I think this long suppression scheme is in the process of ending. They have an end game, and it has to do with their availability to get physical silver and physical gold to get the job done. And there's so many other factors to going against them that I think, yes, gold, silver, way overbought, but after we get some kind of normal activity, they won't be able to attack like they've done these past 4 years.
Well, you and others have said for the last couple of years on a recurring basis that eventually the physical supply and demand rules will overwhelm the manipulators. And if you could talk just a little bit more about that, where do you believe that the demand for physical is coming from, and where the supplies have been, and if those supplies are in fact drying up, what do you see forward in terms of potential price action?
Well, in terms of demand, a lot of people know about it. Look at all the demand coming out of China. It hasn't meant a doggone thing. The demand out of India now is very strong in terms of the silver, and it's always been that way in gold. And of course, you've got all the other demand coming in now for some big players who see what's going on in the macro scene and financial markets all over the world, and with many stock markets caving in and all kinds of concerns about defaults and this and that. Look what the bank stocks are doing. So you've got demand, picking up, and then as far as gold is concerned, they've gone through their central bank stash to meet this demand, central bank gold, and we think that they're hitting the wall. I call it the tipping point, and it's a process. It's not just an overnight thing. But what we saw on last Thursday in gold, on that spike, it went up, I don't know, $60, $70 in a day. That hasn't happened in memory, and it adds. On top of all the rest of the stuff I mentioned, that things are changing, and it's a process. Now, when it comes to silver supply, the gurus I know, including David Morgan and Eric Spott, they don't have a clue where it came from. I have my own theory, but it's just a guess. It has to do with J.P. Morgan, but I think that they're hitting the wall there too. And while they had a magnet to silver around 14, and I call it a silver anchor around the price, which has just been ludicrous. If silver can take out 1850, or when it does, it's going to go ballistic, just like it did in 2011, except when it gets to 50 this time, it will keep on going. As far as gold goes, if we're correct, I mean, if gold had kept up with the price, with inflation, it would be at least double, more than double what it is today. And that's how much it is undervalued. So once the gold cartel, as we call it, grips, keeps coming apart, you're going to get more volatility on the upside like we just saw last week.
For people who have just started paying attention sometime in the last 2 to 3 years, it can look to them like gold and silver are just terrible things to try to put any of your net worth in, even though we and others have described them, you and others visiting our channel have talked about them as a form of insurance, a store of wealth, that sort of thing. When people have seen valuations, at least pricing, drop by factors of 2 or 3, it really can give them a distaste for any thoughts of acquiring. But at the current prices, which have been pushed down over the last 4 years, again, this is not an advice channel, and we don't give financial advice here. But to the people that you're talking about who've been taking a longer term view and are looking forward with a longer term view, would you give people the advice to look into the possibility that this is in fact an opportune time to increase or to start acquiring precious metals if they haven't done so already?
Well, you can probably guess my answer. I'm pretty prejudiced based on what I just explained, what I think silver is going to do in gold prices. So, especially in light of the economic scene around the world, and it's what's created a new safe haven bid in the market, I think it's coming. As you were talking, I was thinking back when I was with Drexel Burnham in New York City in 82. And what was the Dow, 1,000? Or something like that. And look at what it did. And everybody was thinking the same way about the Dow back then as they are about gold and silver now. And these are times that it's great for people to, look into something like this. And the shares, for gosh sakes, are the HUI just went up quite a bit. And just the other day, it was it was priced when I started my commentary in 1998. I mean, it's unbelievable. That's how cheap these shares are, and the public still can't spell their names. And it's a tiny market sector. And if the other markets keep going, and when the public, the general public, comes our way, and we're not even close to that yet, the share prices in gold and silver as the market goes up will just go bonkers. And some of the smaller ones are all priced for bankruptcy, and there's been no money. We've had a depression in the sector, and it's emerging. And I can't stress enough, this is a process. Whether we're going to have some more fireworks very soon, or nobody knows that sort of thing, but they're coming, and you're going to get more action like we saw last week in the not too distant future.
Now, you've mentioned the HUI a couple of times. Do you want to explain to all of our viewers what that is?
I'm sorry. Yeah, it's an index of senior gold stocks that's traded, and it's one that I follow. Initially, came into being because they were back when hedging was a big issue in terms of the gold producers and that were doing hedging, selling forward, which back then was helping to suppress the price. The HUI was created as an index that basically that didn't include the hedgers, and it's one I follow the most. Everybody follows different things, but it went into a base formation for about 6 months since August, and then it was that I don't know, but 2, 3, 4 weeks ago a month ago when it made that. When the gold cartels, we call it, made this attack to take it down below 100, which was the very, very bottom of this base, formed over 6 months, and they failed. And since that day, it actually went straight up. And we said at the time that we thought they were going after the stops because we thought it was part of their end game to cover. And doggone if that wasn't right on the money. And if you can look it up, just look out under HUI, do a Google on it and index, and you can see what I'm talking about. And it's very dramatic, and it's way overbought, and things can get a normal correction. But this thing is just in the very beginning stages of these gold and silver stocks going to incredible levels.
Now, you've talked over the past several years about some of the driving factors of what organizations and what motivation might be behind the price suppression. But why would that be any different now? Why would the dynamics, other than that someone has succeeded in basically driving down the price so that they could cover at a lower and now ready to make profit on the upside, are there other factors that you say something has changed? What is there anything else in the macro situation that you know of that seems to correlate and make sense that there would have been a change in the motivation of the suppression?
Well, it's a good question. It's not because they want to go away. I mean, the gold and silver markets for them are tiny compared to all the other financial markets. I mean, it's just gold is used as a barometer of U.S. financial market health. Think about it. Every time the price goes up, it's bad. What's wrong? There's too much inflation. There's a crisis. So they like to keep it suppressed as much as possible. But the answer is the physical supply. That we're running out of physical supply at a time when a lot of people are looking to go to gold because of all the chaos and in the financial markets, and especially in the bank stocks, what Deutsche Bank's doing, and Credit Suisse and different banks. I mean, they're under the most severe pressure, and nobody knows what kind of derivatives issues they've had. And of course, there's a lot of talk about the oil market blowing up with its price going down, and what's going on behind the scenes. So fear, in the sense of creating demand today, is as high as it's been in a very, very long time, and it seems at this point, because of what they've done and people going to fear, they won't be able to get it down if other markets tank like they did in 2008. They're not going to wait for that. They're going to go right into even more quantitative easing, money printing, and so on. It's already going on again in Europe and Japan. And they're in a real quandary. They've been propping up the stock markets and putting out and doing all this financial engineering, and they're hitting a wall. And that's what's different today versus years ago. The wall is being hit. It's a tipping point that I call it. And the go-to investment now, which has been like dog do for the past 4 years, is going to be gold and silver, and especially silver. When that gets out of the penalty box, watch out. And that, to me, as far as I'm concerned, my guess is 1850 is the key.
Two questions remain for us today. One is, is there anything that people should watch out for if they're going to go purchase gold or silver? Anything you say, I definitely would do more due diligence about this, or consider, in other words, if they're wanting to escape risk or to hedge against risk by doing that, or take advantage of a potential upside, is there any kind of participation in gold or silver that you would say that people should be wary of?
Well, some very good dealers out there that people can go to, and I guess references are very important, and you don't want to pay too much over spot. Make sure you're getting a fair price and that sort of thing. And there's a lot of people that are concerned about where it's stored because of various issues, but that's probably the main thing, and to get it so you can get at it when you're going to need it most, because nobody knows what can happen down the road. And I'm not a big fan of the government confiscating gold, because the rest of the world will just laugh at us. It's not like it was in the 1930s, and China and Russia and everybody else would just want to buy more of it. I mean, and in addition to that, most Americans don't own gold, so it's just a rinky-dink thing, and it would backfire totally. So I think the most important thing is that's in a secure location with the right people.
Last question would be, is there anything in your mind, based on the knowledge that in what you've observed, the trends, the pattern, the suppression or the changes in the shift of tipping point, is there anything you're seeing right now that signals you people should just sit tight and wait before, if they were considering looking for a good time to accumulate gold or silver, is there anything you're seeing now that says they should hold off?
Well, if anyone looks at a gold and silver chart, you see it's going straight up, and you just had a correction when it started when nobody was around, which the bad guys usually do. So there's no question that the market can sell off. But we're talking about, for silver, for example, you're talking about chump change on the downside versus the market going, in my opinion, well over 100, or at least to 100. I know Eric Sprott, who's somebody I have a lot of confidence in, who's been right for so many years, and hasn't got the silver one right yet, but he's going to be right again like he always has been. And so you're talking about, think of it right now with silver right about 15 going to 100. So if you get it at, 1450, 14, whatever, or here, I mean, the upside is extraordinary. So on any kind of dips, I think it's a great time to step up to the plate.
Well, before we let you go, Bill, and I appreciate you being available on short notice like this, is there any other words of wisdom you want to offer to our reluctant prepper audience tonight?
Well, if nobody's taking a look at what I do, of course, can sign up for a 2-week free trial at themetropolcafe.com to see if it's worthwhile for them. And most important thing is and they can get on the Chris Powell does a great job at GATA.org. You can go there, and that's a free mail list. And, Chris is as sharp as they come. He's been my colleague since 1999. And we just think this is a tremendous opportunity. I want to thank you guys for thinking of me. And hopefully the next time I'm on here, we can say one of these we're on our way things. And I think we're on our way, but we've got to make new highs to confirm that.
I definitely am looking forward to having you back when you can say, I told you so. So thank you very much, Bill.
Say that, but I didn't want to use those words.
Thanks for joining us again on Reluctant Preppers, Bill.